In this video I will predict prices for 10 stocks based on CAGR and price to sales. You can do the same with a simple math, or you can write the indicator, and if you have $5 you can subscribe to my Patreon account and use my script. And as a joke we will start from Tesla and with price to sales 10 and CAGR 40%, 1.4. You can see that it is close to fair value in 2 years. Here you can see Apple, and first of all you need to find CAGR, and it is quite simple. I think 10% CAGR for Apple it is okay. You need to write 1.1, and now you have to determine right price to sales for Apple. And you can just connect green with yellow lines, because yellow it is just price to sales. You can see changing number on the top left. It is price to sales 3. I think it is not really good. Maybe we can use 4. Yeah, I think 4 it is super good. And we have 2 red crosses. It is a price for end of 22 and close to end of 2023. Technically it is end of November because we have some limits here. Now I will just push it to my long-term list, updated long-term list, and if you don't have any list, you can just think that in 1 year you will lose 40% in Apple, and that is why I'm not buying it. But I can say that Apple is a bad stock to buy because it is not true. And we have these predictions. Performance 1 year minus 42%, performance 2 years minus 36%, and you can pause this video and watch a little bit closer. Definitely I wouldn't buy Apple because it is too expensive from my point of view. But if you think that price to sales 10 and CAGR 1.2 is a more fair value for Apple, you can buy it and hold it and wait for plus 50%. Next stock it is a Microsoft, and it is a little bit complicated because Microsoft from 2015 and Microsoft from 2021 it is a different companies based on their model. I think price to sales 8 and CAGR 15% is absolutely okay. And again you can see that it is not good, minus 30% and minus 22%. Next one, Google, and it is super sweet because green line absolutely the same like a chart, and you can see this red dots, it is a manual, and it is a first stock where we can see a positive numbers. In 2 years it will be plus 10% or something like this, with price to sales 6 and CAGR 20%. Here you can see Amazon, and with price to sales 3 and CAGR 25%, it is close to fair value in 1 year. Maybe we will see some flat for 1 year, but in 2 years you can expect 25% if nothing will change with valuations. BIDU, and if you are going to buy it, I suggest you to buy it on Hong Kong exchange, because maybe they will be delisted. I think all stocks can be delisted from the United States. With price to sales 3 and the CAGR only 10%, it is quite interesting because we can see plus 54% and 70%. From my point of view, it is awesome. For Intel, I use price to sales 3 and CAGR 5%. You can see it here, 1.05. And it is quite interesting. You can expect plus 20 in 1 year and plus 26% in 2 years. Technology services for businesses into it, and you can see that they have these jumps in revenue, and that is why it is quite hard to predict their prices. I think price to sales 11 is okay for Intuit because they are quite good, and you can see that we're expecting minus 22% and minus 11%. Not really good stock to buy right now. Bristol Myers, and we have only 2 stocks left. Don't forget to push the like button. It is quite strange because in 2015 they had price to sales close to 6, and now it is close to 3. I think 3 is okay, and again we can expect money and it is good, plus 15% and plus 30% with price to sales 3 and CAGR only 15%, and the last one with price to sales 15 and CAGR 15%, Intuitive Surgical, and again it is a little bit overpriced. You can expect minus 20% and minus 10% if you will buy it right now. If you want any specific stocks, you can write tickers in the comment section below, and maybe I will make a video about your company.